Hey guys, super happy to be here once again on our show, the Blushing Quants. And today we have Paul MacGregor. Paul is a very, very special guy, very friendly guy, to be honest with you, and very informative one that had plenty of experience across many topics. And we're going to be diving deep to each and every single one of them in today's conversation. So I'm very, very, I'm thrilled to start that conversation. So without further ado, Paul, thank you very much for coming here. How are you today?
I'm great, Afex. Thank you so much for inviting me on your pod. Thank you for the honour of doing so and giving me the opportunity to talk a little bit about my knowledge of the markets and how I've experienced how my career has sort of evolved to where I am today and what I see for the future.
Mhm. So the honor is the honor is ours, and absolutely, this is a privilege of mine. So without before we're going to be diving into the conversation, I would love to you to present yourself to the audience that's listening to the podcast.
Sure. I'm Paul MacGregor. I've been working in a range of roles in the financial markets, probably for like approaching 30 years now. I started out at BP many moons ago and moved. I was in the strategic planning team, which was very exciting at the time. There's many M&A going on, acquisitions. It was during the actual first Gulf War. So it had a big impact on the BP share price because obviously they had a lot of oil fields in Kuwait. And then I moved from there to the life derivatives market in the late 90s. And this market was really exploding. And it was sort of open outcry at the time. Lots of color, lots of noise, bright trader jackets, people shouting at each other. Really exciting. But my role there was to go and talk to hedge funds trading futures markets and try and get them to look at our real time historical data so they could build their quant models. Because even back in those days, some of the more advanced funds like Niederhoffers of this world were starting to backtest systematic models, the very early days of it. And we felt that the exchange to get out there with tick data, time series data second by second, would actually have a big win on their hands. And I'll never forget a quite difficult meeting with a particular fund in New York with a colleague of mine where he was like, great, you've got this data. Oh, yes, we'll probably build our trading volumes. But I want to tell you something. When I send an order down to your floor, a large order, say like 5,000 lots or something, the amount of slippage I get, those guys passing the order amongst themselves before I
Mhm.
get filled is actually astonishing. And so we walked out of that meeting, and my friend turned to me. He said, do you think this market's going to go electronic within the next 10 years? And I said, if you think it's 10 years, then it's going to be 5 years. And lo and behold, by 2001, we were pretty much totally electronic. One of our main contracts, the German government bond futures, had upped and walked across to what was Deutsche Terminbörse at the time, now Eurex. And it was a real shock to the system. And we had to very rapidly build an electronic trading platform, but not just an electronic trading platform for bonds, equities, and index products, but more importantly for short term interest rates, so called stir products. And they trade in a far more complex manner. So most of the trading in stir markets is through strategies. So people are not just buying one contract, they're buying and selling another contract, maybe a strip of 8 contracts in one. And no one had ever built an electronic trading platform that could do that. We were tasked to do it. We did it. We successfully migrated what was then the Euromark onto screen and the short sterling contracts and the Euro Swiss. And it was a very successful project. In the end, our trading volumes tripled as a result of moving from floor to screen. Obviously, it's sad in a way to see all that sort of color and noise disappear, but it's evolution, right? And
Mhm.
as a result of that, I would say that very successful project, one of the most intense periods of my career, Euronext, which are a conglomerate of different European exchanges, came in and bought Life, and they said, okay, we want this electronic trading platform in Paris, in Amsterdam, and in Lisbon. And so it was my job to go and do those deployments. And Paris and Lisbon and Brussels went pretty well. The difficult one was when we got to Amsterdam, because obviously what we found out when we got to Amsterdam is these guys trade options on screen. I mean, it is one of the most liquid options markets, well, probably the most liquid options market in Europe. And certainly the guys there, they loved reminding me that the world's first stock exchange and options exchange was founded here in Amsterdam. It's called the EOE.
Well, they correct.
Yeah,
They're correct.
yeah. It's called the European Options Exchange, and it was options on shipping. You know, Dutch
Mhm.
shipping back in the colonial days was very, very important to the economy. And so they're used to trading options on screen. They had this AEX product, which was liquid. They had people quoting out 5 years on options. Obviously, all the individual equity options. And again, we had to re-architect the system to cope with the capacity of all those options that are quoted, two-sided, and build a number of market maker protections in, delta protections, etc. And we did it. It took a bit longer than we expected. I pretty much ended up living in Amsterdam during this project just to get it done. Made a lot of friends out there. And then guess what happened? Another exchange came along and said, "We like what you've done." And the New York Stock Exchange came and bought Euronext, which was then the holding company. So I'd gone from open outcry at LIFFE to electronic trading at LIFFE to Euronext to New York Stock Exchange. And really was a fascinating journey. I then sort of moved away from the electronic trading side of things and ran the fixed income business for LIFFE, which was the largest business that they had. And one of the main reasons it seemed like a natural migration for me is what was really emerging in the market then was the real sort of upcoming of algorithmic trading. And not just, if you like, the banks or the hedge funds developing these models, but individual proprietary trading groups had grown massively quickly. And I knew most of them because I put them onto the platform. And so we then sort of developed that market, grew the Euribor, grew the options, grew the back months, developed a pack and bundle market on LIFFE, which we'd never had before. It's obviously very, very active on the CME. And then I felt it was time to move on because I'd kind of done everything there was to do at the exchange. So I moved to one of the technology companies that had developed out of our floor to screen migration. You know, several British technology companies had just sprung up out of innovating and seeing the opportunity to actually build trading screens, matching screens,
Funny.
post trading functionality. And that company was called Fastbill. And lo and behold, once again, I joined the company, and a bigger technology company comes in and says, "Yes, we like what you're doing. We think we'll buy you." That company was called Ion Trading. And I don't know if people know much about Ion Trading, but their background is they were very, very big in the bonds and fixed income space. They had a technology that which all the banks kind of had to have, which really dominated that space. So again, a fascinating few years there. And then I was hooked out again to go back into the exchange world. And I joined the London Metal Exchange, which couldn't be more different to coming from an exchange like LIFFE, where you had everything had been done electronically. People were very used to that, lots of high
To a very conservative
yeah,
market.
exactly. So, and actually to a physical market. It really is a
The
physical.
physical one.
Yeah,
Hmm.
yeah. So London Metal Exchange contracts, the main ones being copper, aluminium, nickel, zinc, and lead and tin, are physically settled. So if I'm buying a future on copper and I hold it to expiry, someone's delivering 25 tons of copper to my back door. So it's a very different dynamic in terms of the risk, in terms of who's using the market, and it had a very low percentage of electronic trading. And I'm proud to say that we managed to attract several of the large high frequency trading firms onto LME Select, which is their electronic platform. Got a lot more of their market electronic. I was just down there yesterday, actually, having a look at the open outcry floor. It's the last one in Europe. You know, they still have an LME ring. And talking to one of my ex-colleagues, and he said, yeah, about 50% of the volume now goes through the electronic trading platform. So they're on the right path, but I feel that it's kind of slow and a bit frustrating. What's interesting about that market is obviously you have very successful competing markets. The COMEX market, which is part of the CME group, has a very successful copper contract. They've been trying to get into aluminium and nickel. And what a lot of people do therefore is trade the arbitrage. You know, copper arbitrage, one of the biggest arbitrages in the world. And then the fascinating thing that happened while I was still at the LME was the rise of the Shanghai Futures Exchange. And we'll talk a little bit about Chinese capital markets later in the pod, I'm sure. But Shanghai Futures Exchange had effectively listed all of Life's contracts, smaller contract size, but their volumes were just enormous. Everything was traded electronically. You know, it was normal standard quarterly expiries. The only difficulty was getting access to it because, as I'm sure
Hmm.
you know, you can't just set up and go and trade in China. There's lots of different regulatory hoops you need to jump through. But again, the volumes went up on the LME because people were doing arbitrage. And yeah, it's again, a fascinating time. I then moved on from LME to do some trading actually at a company called Britannia Global Markets. I was running some of their derivative sales. We had a fascinating time. People were obviously trading LME life contracts. Had a very big client base in India, so did some traveling out to India and the Middle East on their behalf. And we also had some very interesting clients in the options space, very active clients in the options space. And I also did my first actual transaction in something which I think people have rarely traded, which is carbon options. So I had a client
Oh,
who had a carbon position and they said, Paul, I want to roll this option forward. I want you to adjust the strikes. All of this is purely OTC, nothing electronic inside. You're never going to see a carbon option price on screen. So that was quite stressful, I have to say. So, but anyway, Britannia are doing very, very well, going from strength to strength. I then went to join a tech company, and this is just about when COVID hit. So I kind of reflected I made the right decision here because, you know, during
mm,
COVID, it's kind of, if you're broking and you're broker sales, how can you get out and see anybody? It would have been absolutely really, really difficult. So, but for this tech company, we could build things behind a screen remotely. One of our biggest clients was Christie's, the auction house, and we wrote their electronic auction platform. Obviously, pre-COVID, it was about 10% of the business they were doing. During COVID, it became 100%. And
let me ask you a question, Paul,
sure,
because that's very interesting. I have never look, I've never like spoke to commodities or into commodities in particular. In any particular episode, we were talking about quantitative methods, quantitative techniques. That's very good. But we have never talked about company that produces or provides as a product
yeah.
auction processes. I would love to hear more about how it actually applies to the financial markets. Who are the customers for such product? How do you think about a need for such product and what it actually solves?
Well, I think actually, if you look at how it applies to financial markets, many markets, in fact, most markets, have what they call an opening rotation. So this is the pre-market before the actual electronic market is open for trading. People can put their orders in, and that opening rotation is a kind of an auction process. It's kind of people bidding to say, okay, I want to be at the top of the book. Immediately the market opens, so my order gets filled. And that's kind of a pre-auction process. So each exchange kind of has a need for that kind of functionality within it. But this company really quite specialized in it. And one thing I was very proud of while I was there is we built a climate exchange for a Singaporean company, Climate Impact X, completely remotely during COVID, and they were auctioning climate projects. So mangrove swamps in Pakistan, for example, which are very good for the environment, by the
Hmm.
way. Particular forests in Southeast Asia or Latin America, where people want to spend their environmental dollars, but have it validated that this project actually exists. So we built a platform where you could see on screen the project. Um, the company had drones flying over these projects to prove that they actually were there on a regular basis, so they're validated. And then you could say to your customers or your boss or whatever, we are offsetting X amount of carbon by part ownership of this particular project, and it's real, it's there. It's not like the OTC version of carbon trading where no one really knows, there's no real transparency around the existence of the actual project. And obviously, over the years, carbon trading has got a pretty bad name, I would say, for a lot of things. And what Climate Impact X, which is the name of the company in Singapore, is trying to do is shine a light on
Mhm.
that market and really bring something that was transparent. So I was very proud to be part of that project.
That's very interesting. That's very interesting. Okay, so let's talk about like everything that you have just mentioned. You have mentioned a lot of intervening products and projects among like multiple exchanges, and I would like to understand about like patterns in the market because the markets are actually evolving
Yeah.
every single nanosecond. But um, I don't really want to talk about the market necessarily, but I want to talk about the people who work in the markets, and I want to talk about their evolving process because we like the people you gone through a sort of evolution with time. So you saw the transaction from discretionary trading to quantitative models, and from quantitative models or for systematic strategies to quantitative models. You saw the growth of hedge funds and how hedge funds are actually growing, and how allocators are actually getting interacting with other clients in space, and how the business entirely is actually shifting from point to point in time, and how it actually accumulates by the end of the day to a particular product or to a particular understanding of you know a company that knows what it does, like it can release products, can be profitable. And I would like to hear from you, how do you think that people go through that involvement? What is the main characteristic or the main pattern that you recognize that distinguish people from the rest of like successful people from unsuccessful people in the markets? Because
I
that's I
think
think a
one of the
point that we
things,
haven't.
yeah, I think one of the things I notice over time is, you come across very, very senior people, people who've set up their own companies and have been very, very successful, proprietary trading groups or senior guys at exchanges, senior guys at banks. But the one thing that strikes me the most about the most successful people is they have what we call emotional intelligence. So it's not necessarily just the ability to see an idea and jump on it and make it a success and drive it forward and drive a team, but it's also having that, emotional side of being able to read others, being able to empathize with people. And that really drives strong leadership, because when people know they can trust you and they know that you can sort of gauge their point of view. These are the most powerful people you come across in the markets, emotionally intelligent people, not necessarily just the actual highest IQ in the room, but the highest EQ, if you like, in the room. That's the real quality that I try and develop, and we try and develop within our teams now here at Argent Global. I think that's a really important thing that I've found across people I've met in the market. It's just people who've always got the time for you. You may be talking to the CEO of a very successful organization, but they'll respond to you. They'll respond to that email. They'll pick up the phone. They've always seemed to have be able to find the time to deal with even the littlest things. That's a hard skill to develop, a very hard skill to develop because we all get so busy. We're all rushing around. Sometimes we're ignoring each other because we're just up to here, piled up to here with tasks. But you've got to find the time to just connect. And one of the things I think we do so well here at Argent Global, which is the company I'm at now, is we connect people together. You came to our event. I think you saw how we kind of
That's right.
put a skill to it to actually finding the right people to put in the room together so that they all feel it was worthwhile coming here today. I met five amazing people. I've got 10 great conversations to follow up on. And that's one of the key skills I think we're really trying to develop at Argent Global. That's what makes us stand out, I'd say, from other people who put events on in the markets.
That's very interesting. Because look, I would be frank with you. Like in the conference itself, where we met in London, it was pretty diverse, but not diverse because people you could immediately identify that people come from all around, but people are actually gathering for the same type of problem. And I really want to hear from you, Paul. How do you perceive or how do you think about, you know, a need in the market? Because we interact with people. We still interact with very conservative and very senior people that knows what they do. Obviously, they run their business, so on and so forth. But we still interact with people and understanding the pain. Besides making more money, I think it's pretty problematic. And obviously, you have a very rich resume, and I would like to hear from you. How do you distinguish that particular pain point that they're experiencing? What type of conversation you're having with them as CEO of Virgin Global, which is a very communicative communicative company. I'm sorry. So I would like to hear from you your perspective about
Yeah,
it.
well, actually, the founder and CEO of Argent Global is a very interesting man. His name's Hemel Randawala. And I actually met him around the time I was at the London Metal Exchange. So it must have been 8 to 10 years ago. And he actually originally founded Argent Global as Argent Capital, so as a proprietary trading group. And he was a very successful proprietary trader. And he came and did some market making on the LME, helped us get some new steel contracts growing. So we'd sort of stayed in touch and been friends ever since. But one day he was trading and he went out for a walk at lunchtime to sort of had a break. And he came across a homeless person and it really affected him. So he walked back into the trading room and he said, "Okay, everybody stop trading, just close all your positions. That's it for today. We're all going to go to the supermarket, buy all the food we can, and give it to homeless people." And that became his, if you like, his epiphany. And on the back of that, he founded a charity called Godamic. And Godamic has distributed now over 1 million meals worldwide. There's a distribution in Charing Cross that happens every Tuesday evening. I've worked down there. Many of the homeless people in London know about this and just can come along for a hot meal and a hot drink. There are distribution centres in other parts of the UK. There's lots of charitable work he does in India. We've opened schools in India, and there is disaster relief element to the company as well. So Hemel realised that we can too often we can be in this race to make as much money as we can, and then we die, right? But there's something more important than that. We should find time to give back, and to have respect and humility for other people around you. And I think Godamic always just, if you go along to that food distribution, it just brings you down to earth. Immediately, you're like, wow, okay, we're doing something important here. It's not just about making money. So I actually started raising some money for Godamic by doing some mountain climbing with a colleague of mine, ex-colleague of mine. And we did, 3 peaks in Wales, we did the 3 peaks in the UK, we did the Yorkshire 3 peaks, each time raising money for Godamic through charity. And then a couple of years ago, we decided to go international and we climbed Mount Ararat in Turkey, which is quite a big one. It's probably the highest mountain in Europe you can walk up without a technical climb. It's over 5,000 meters. We had to, altitude train before we went. Otherwise, you're not going to breathe up there. And it was a fascinating experience, really fascinating. And we're doing it all for Godamic, at the end of the day. I mean, it's personally satisfying, but what's more satisfying is you're doing good while you're doing it. And so after doing the charity for a number of years, Hemel started getting approached by other people in the markets because they knew he was an experienced trader. He'd had a big background. And so he did some consulting projects to help smaller exchanges become bigger exchanges. So he did some work with the Gulf Mercantile Exchange. He did some work with OKX, which are actually very big now crypto exchange. Did some work with Nasdaq, which we've all heard of. And of course, all these consulting clients turned around and said, "Oh, why don't we run an event so we can tell people what we're doing?" And then that became a huge business in of itself, running this events platform. And it was literally a year ago, Hemel called me up and said, "Paul, this event side of the business is really exploding. Would you like to come along and help me?" And I was like,
Hmm.
"Sure, this sounds really interesting, sure." And so since then, I've been involved in events in various different cities in India, in Gift, in Gurugram, in Mumbai. We've been to Dubai several times when we were allowed to go there. We've run events in Chicago, in Singapore, and obviously in London. They visited, and then straight after London, we went off to Amsterdam. And I think the one really thoughtful thing that Arjun tries to put into its events, which I think a lot of other events companies don't, is to realize it's all about networking. That's the reason people are really coming. Sure, we want to put on interesting talks, definitely want to put on interesting talks. But the most important thing is the networking, both before and after the event. And I think alongside that, having those really interesting talks. So not about we're not about regulation, we're not about rules, we're purely about business development, helping people grow their business. And that's why I think those Argent Global events are so unique because we purely focus on that.
Hmm. That's very interesting. Okay. Let's dive into more particular conversation um, around the discretionary world and
Yep.
commodities. I would like to hear more about your perception of commodities. How do you think of commodities nowadays? How do you think about the contracts, more future contracts of commodities, the hedging strategies, your and your entire perspective of how the world evolves and how quantitative hedge funds are actually hunting and taking a major piece in the trading world of commodities, especially.
Yeah, I think that's a great question. I mean, I think a lot of us, prior to, the conflict that is still kind of going on in the Middle East, a lot of us weren't really worried about where commodities came from, right? So we just think, oh, this cocoa which makes coffee, that's just, I'm just going to go buy that. Or, the steel that goes into the motor car I'm driving and the copper wiring and the aluminium that goes into the electronic, goes into a lot of the components and the nickel which goes into electronic battery. We take all these things really for granted. But I think what has really brought home to us when you have the closure of a key strategic waterway for a period of time where people can't get those commodities and is close to running out of those commodities, people really start thinking now, where does this stuff come from? How does it get there? And I think that's fundamentally changed with the world of commodities, and people will be looking for alternative routes, backup plans. I think the other thing that's evolving in the world of commodities is we can't just rely on those same old trusty benchmarks. People need to find new commodities which are reflective of what we're actually using in the real world and are reflective of real hedging strategies for physicals who are buying and selling those commodities. I remember a very interesting conversation I had with a large nickel producer when I was working at the London Metal Exchange. And he said, "Paul, you realize your nickel futures contract, 50% probably of your volume of nickel futures actually goes into steel now. The other
Mm.
50% goes into electronic vehicles, to make the car batteries." So it's kind of not really a decent hedging contract anymore because I don't know what I'm hedging. Am I hedging steel or am I hedging, EVs? And so certain this provides an opportunity. The other opportunity is the importance of liquefied natural gas. When you're physically hedging, liquefied natural gas. There is no LNG futures until recently. People were doing it basis Brent crude or basis Henry Hub. And that's a massive basis risk, right? Huge basis risk. So we've been working quite closely the last year or so with a relatively new commodity exchange called ABAX, based out of Singapore. And they're a physically settled commodity exchange which lists LNG futures and lists battery metals. So it's not just nickel, it's nickel sulfate. It's not just lithium, it's lithium carbonate. So if you do want to hedge directly against those things, then you've got no basis risk if you're using those contracts. And I think, hedge funds who have been obviously involved in commodities for a long time because it offers a good way of diversifying their portfolio. So they're not just trading equity related and bond related products. Let's get into physical commodities as well, because this really reflects the real economy, the state of the real economy. And they should be taking a very close look at what some of these new benchmarks, emerging benchmarks, can potentially offer into the future. We ran for ABAX recently a seminar in London purely about LNG futures. Right, so it's just before your event that you came to, the week before. We had a very busy couple of weeks. The week before, we ran an LNG futures seminar. I mean, so specific, right, in the West End of London. And ABAX themselves thought, well, you might get 15 or 20 guys to go to it. I think we had about 80. And in the room, the quality, we had BP, Shell, ExxonMobil, Total, and the commodity trading desk of Millennium. So that's how fascinated people are by this specific subject and how relevant it is right now. So I think the world is looking at the development of commodities very, very closely. I mean, I think it's great for exchanges that list commodities because their volumes are just rising and rising and rising. But I think there's new emerging benchmarks which are coming out. We also, at the event you came to, Affec, you heard the guy from Expana potentially speak.
Yeah.
They have an enormous amount of benchmarks in the food and agricultural industry. And their point is that if you look at the so-called soft commodities, there's a few benchmarks out there, but the world of food is just enormous in terms of the different derivatives and the different benchmarks you should be using. So I would watch close. That's what I said about trying to have interesting events. We're trying to bring where the world's going next, to our
Yeah,
platform.
and I think that it's very interesting to look when I come to a conference and I want to predict or approximate what's going to be relevant for me in a particular set of time. I think it's a pretty strange task to be achieving, and the reason why it's very simplistic because it's very non-determined to understand or to derive like relevant information. But I would like to understand from you, how do you at a conference when you're listening to people, because we're having podcasts here, multiple listeners listen to the podcast. I'd like to hear from your perspective when you're coming to conference. What do you try to take? How do you build your approximations and assumptions? um, how do you derive relevant information, and how do you derive irrelevant information to help you better approximate or better predict uh, on your particular use case what's going to be relevant for the continuation of your business?
Well, I think the first thing is what's the energy around that conference? How are people feeling? Are they excited to be there, or are they just doing it because they always go every year? That's the first thing, right? The very, very first thing. And you'd be surprised the few amount of conferences you can go to, and there's literally hundreds of thousands of financial market related conferences you can visit around the globe. If you look at everything, we actually have an AI tool now, particularly scanning for these conferences to make sure A, we don't clash with them when we run ours, or B, maybe we want to satellite them because that's a pretty good one. But it's really about those conferences that have got the energy. So we try and build the energy around ours bringing unique people together. And it's how many people did I meet that I didn't know already at this particular event, or did I see a bunch of my friends who I already know? And how many of those can I potentially convert into clients? Is this a useful hunting ground for me? Are these people who will come along to our events? Are these people who will sponsor? Is there a family office in the house? Is there a good sized hedge fund? Is there some quant firms in there? Which really try and focus at our events on the end users. The end users, I think, are so important in the market. I mean, you saw we had what is quite unique at our events. We always have an alpha panel, and the alpha panel is purely for the buy side to talk about what they're seeing in the markets now, how they're adjusting to risk, what they're seeing in the markets in the next 6 to 12 months, and it really is like a panel for the real users of the marketplace. I think so often we'll come along to events and we'll see panels where it's purely a whole bunch of sell side. So it's the exchanges, the tech providers, the banks and the brokers all trying to sell something to you. Or it's the regulators all trying to tell you that this is how I'm changing the rules. So rarely do you go along to an event and say, wow, there was so many buy side there. It was so cool. I think the other thing that is really important is trying to get the size of these conferences about right. If you have a conference that's too large, you can feel like you're just lost in a big room somewhere and you can't find the right person to speak to, and it's just really energy sapping. At the same time, there has to be enough liquidity to make you feel like, oh, I'm part of something special here. So we like to keep our events, at a reasonable size. There's only one event that we do, which is going to be conference style, and that will be in India. It's simply because we can't help it growing. It's just it's in Gift City in Gujarat, and this event's become enormous. I don't know if you know much, Afek, about the Gift City project. So it's effectively,
Please expand on that,
yeah. So
Paul.
it's effectively Prime Minister Modi's project to try and build the onshore offshore connection within India. So obviously, one of the first things we saw when the Indian capital market started exploding is a lot of traders migrating to places like Dubai and Singapore, where they could trade global markets legally without all the difficulties facing doing that same activity from within onshore India. So that was a big trend in the last sort of 15 years, I would say, of the markets. So to counter that, there is a project to build a city called Gift City, which is really fast growing, to have a tax-free zone and to have a separate regulator and allow onshore traders to trade international markets. Now, what's happened, and I went to Gift City for the first time last year. I'd been to Mumbai and Delhi and Gurugram and Jaipur and many other places over the course of my career. But I was amazed by what was happening, and I heard about some of the Western names that had set up in the city in order to trade onshore India. And you realize that this project is actually working because you are seeing as many Western companies wanting to get in as there were Indian companies looking out. So that's a fascinating new trend. And the place to me felt like, Dubai 20 years ago. It's just growing so fast. And
Yeah, well, and I think that exponential growth among particular set of group or a particular set of people, uh, enables you to understand the underlying business opportunity that they're in, and let's expand a little bit about that particular subject. When you realize that you have a business that you're interacting with and it's growing exponentially, how do you derive or how do you think of business opportunities with them, or how do you think about business opportunities in the market that they belong to, in relation to what can you learn or what can you extract or what type of relationships you can establish with them?
yeah, so I think you've got to be as open as possible. I mean, our gift event this year. It's the first time we're trying an expo style. So we will have an all-day conference. We'll have conference booths, um, and we're expecting a footfall of over 1,000 people on the day. But we've got to make sure we keep it relevant. Otherwise people are going to boomerang back on us and just say, hey, you told us you weren't going to become one of these big, type financial conferences, and look what's happened. You've become exactly like that. So we've got to still make the content interesting, the speakers interesting, the attendees relevant. It's a lot of work. It's a lot to think about. But at our last event there, I mean, and Argent Global, by the way, is the only company that's been running events in international companies, been running events in gift consistently for the last 5 years. And now it's now sort of hit the crest of the wave, if you like. Last year, we had 15 international exchanges attend and something like 20 international brokers. And they all flew in for this particular event because they realized how important Gift City has become. And no one else had sort of seen that except us outside of India. Obviously, inside India, they're very aware of where that's growing. So we've got a real job on our hands now to make sure we both capitalize on this, but do it in the right way, do it in a respectful way, do it in a way that we're going to build long-term relationships for long-term business, not just turning a quick buck. We want to be going back to gift in another 10 years' time, for example. And so I felt a real sense of we're seeing something really quite exciting happening here.
Mhm. Very interesting. Um, Okay, so let's talk about more of how it's like to establish an operation in a stock exchange. I would
Mm.
like to hear from you. I would like to hear from you, Paul. Obviously, um, what type of people are needed in order to start such a partnership in a particular case to establish the thing that you were working on in Amsterdam, the thing that you were working on in Brussels and across Europe, and then what was needed and what type of experience was needed to be implemented in the New York Stock Exchange in order to fulfill such a product.
Yeah, I mean, it's if you think about, I'm thinking about specifically the rollout of the Life Connect platform across multiple markets. Um, First and foremost, the people behind building your platform, and this goes for any exchange, have to be really good at what they do. They have to be very reliable. They have to be fast reacting. They have to be iterative developers that can fix problems quickly, build new features quickly, roll them out quickly, and safely deploy them. I'd say the other key thing that we as a business people really rely on is having really good project managers. Because if you're going to tell people that, okay, you're trading this way, now you're going to be trading this way with this completely new technology, you need to have a roadmap which is laid out for a year ahead of how we're going to get there together. And you have to bring the whole market with you. That's one of the most challenging things. You can't have people, dissenting people sitting in the back of the room say, I'm not doing it. I remember one of the critical things I mentioned Amsterdam before being one of the most more difficult places for us to go because of their style of trading and a little bit of negativity, I would say. I had to give a presentation which was almost a make or break to the Dutch market, whether they were either going to decide to accept our project or it was just going to get sort of thrown out. And feeling was is this was a 50-50, and I did so much preparation for that particular presentation. So it got over the line. People were accepting. There was a positive buzz around the room. So it looks like I'd sort of started the project in the right way. Then, of course, you have to deliver. So I think it's not only about having, great developers, great project managers, implementation people to roll these things out. It's also, you've got to have a bit of charm and charisma, right? You've got to sell people the dream. You've got to make them think, oh, if I do this, yeah, it's going to be a lot of work, but look what's going to happen at the end. Isn't it fantastic? So you have to sell a dream to a certain extent. Um, Another example I put with you is obviously co-location data centers is a thing that everybody does now. Everyone wants to be as close to the mashing engine as possible. We set one of the first ones up at Life. It was just a natural evolution of what we were doing with the technology. And this was just about the time NYSE were coming in to purchase Euronext. And I set one up in London. And I had something like, I don't know, 24, 48 pods to sell. And people were very, very, pessimistic. Oh, you're never going to fill this up. How much are you selling these pods for? X £100,000. You're never going to achieve that. We had some of the biggest algorithmic trading firms come in, have a look around at this and say, I'll take four. So this thing was going to go quickly. And I set up a little bit of a competition between the European sales teams, where I'd have a chart, a bar chart in their natural. It would be a bar chart, but the bar was done in the style of their national flag, so it became competitive between London, Amsterdam, Brussels, Lisbon, and Paris. How many of these colos can you sell for me, guys? Go out there and do it. And then I publish it weekly. And I said, I'll give a case of champagne to whoever wins, right? So they have a lot of incentive to do this. And we filled the whole thing. In fact, it was just completely full, oversubscribed. So you need to have, as I say, aside from the real technology, you need to be have a lot of charm offensive and sell people the dream.
Hmm. That's very interesting. Very, very interesting. Okay, so Paul, let's dive into our last conversation. Let's type of the last subject of today's conversation. Um, and that's going to be in relation to yourself, to your perspective about markets. Where do you see the markets are actually shifting right now? Um, you are the organizer as we speak about for multiple conferences, and my assumption is that you have very cooked information to share with us about where the markets were going to be shifting towards. And my question to you is, what do you think about it?
Yeah, so thank you. I mean, I think in our business, particularly the events platform business, we get unique exposure to many, many different participants around the globe. And they all sort of talk about the trends that they're seeing. And you start forming a sort of some pictures in your mind about, okay, I can see some interesting shifts here. I would say the first and foremost one is a lot of the high frequency trading firms that were making a lot of money over the last sort of 10 to 15 years. It's not as profitable as it used to be. And
Mhm.
I think one thing I'd heard from one particular trading firm, who I won't name, is when Trump first came in 2016, after about 6 months to a year, they realized all of their models were not working anymore. Literally all of them. So it's almost like they had to scrap everything and start from scratch. And I think one of the impacts of, if you like, the Trump trade or Trump announcements, etc., Trump tweets, is that, the predictive models that people have been relying on, and if it applies to the high frequency traders, it will apply to the systematic hedge funds as well, is you need to really look at these models over in a fresh set of eyes. And there's a lot of rewriting going on out there at the moment. That's one
Mhm.
particular trend we've seen.
Okay.
Another trend we've heard is slowly but carefully, a lot of the asset managers, family offices, a lot of the real wealth is slowly diversifying away from dollar. They see being overly reliant on the US dollar as a risk, because of the unpredictability, shall we say, of US domestic and foreign policy. And so there is like a fear in some of these asset managers, some of the largest ones in the world, and this is a trend we heard when we did our last event in Switzerland, is we're slowly starting to increase our holdings of alternative currencies. And that's where I see an opportunity for if the emerging and emerged economies can take advantage of that for the RMB to have more of a significance in terms of the global payment system and its global relevance overall. I don't see it internationalizing, becoming fully convertible, anything like that. But I do see, and as I mentioned earlier on the pod, with the explosive growth of commodity contracts in China and them becoming benchmarks in their own right, people will need RMB exposure. And I think there'll be a lot more payments flow in RMB. It's not going to replace the dollar, no way. But I think the relative dominance of the US dollar in global trade will come down somewhat.
Mhm.
So
That's very interesting.
yeah, that's another sort of trend that we picked up. I'd say generally the other thing is another trend that we've heard from the fund world is diversification, but not necessarily just in dollar, but tell me about new markets. What new things are there out there that I can diversify into? And that's why we're so fascinated to take with us on the road, the story about the rise of the Indian capital markets, the story about the rise of the Chinese capital markets. You saw we had speaking at our event, our headline sponsor was the Saudi exchange. The Saudi exchange is really trying to put itself out there as saying, hey, we're one of the largest economies in the world without a derivatives market. We need to fix this. So I think taking with our message around the world is there are other opportunities. You don't just have to trade what you've been trading for the last 20 years. Let's have a look at something new. ABAX, I mentioned, is another interesting innovator and disruptor, particularly in physical commodities space. And I'm very excited to see how their market develops.
Mhm. No, we all on the same page, and I think that it's going to be very, very interesting to see where or how we're going to be led by the confluence of the markets. And Paul, honestly, I have here a lot of conversations and very, very, very changed subjects, but that conversation was in particular very, very important to me because, we have forgot like that we interact with people,
Yes.
and the information doesn't lies in the code or it doesn't lie it's in the strategy. It lies in the people who build it, and people might forget the fact that still people are responsible for business and not AI agents and so on and so forth.
Yeah.
And the
Not yet.
necessary way and the relevant way to approach that market is only mainly by talking to people. And this is why, to me, this conversation was like very informative and very, very special. So I appreciate it. I appreciate you coming here. I appreciate everything.
Absolutely my pleasure, Afek. And I think I've watched a few of your previous episodes. I think what you're building here is something really exciting. We'd love to see you at our Argent events again in the future and have you
I
up on the
will.
stage and have you talking in front of the audience. So we'd love to have that. And so let's stay in touch.
I would love to. Okay, guys. Thank you for coming. Thank you for listening. See you the next time on the Blushing Quants.
Thank you. Bye bye.